the thing that is really important here, and what this chart shows, is essentially all of the hiking cycles that we've gone through since 1983. So 83, 87, 80, 94, 99, 04, 15, and the current one. And here's what I just want to call out for you guys. What's incredible is that other than the one in 83, so this is sort of like, that last big one, what we've seen is that the stock market has a tendency to immediately go to the conclusion very early on in a rate hiking cycle. And now, why is that important for normal folks listening to this thing? Well, the reason why that's important is right now we're in month 7 of a cycle. We obviously don't know how long it's going to be, but the odds are improving every day that we're near the end versus the beginning. And why that's important is, again, if you're thinking about when to, buy equities, for example, this is a really instructive guide, because what it tells you is the closer we get to the end, or more importantly, the closer we psychologically know that the end is coming, we start buying. And that's just a broad-based statement that has been true. So, what you see right now, I think, is really interesting, which is that despite all the bad information, oh my gosh, the Nord Stream pipeline blew up. Could it have been sabotage? Was it the CIA? Was it the Russians? Oh my gosh, big tech is slowing spending and firing people.
China's in a coup. I don't know if you saw that rumor. Yeah.
Or how about something more benign? The US, US yuan is really trading in a crazy way. The US euro is trading in a crazy way. The US pound is going crazy. Yeah. Despite all of that, every time we trade down, the market consolidates very quickly. And we sort of so I think we're forming a bottom. I do think that Stan is right. We are going to see a hard landing recession. Something will break in 2023. I hope it doesn't. I hope it doesn't affect a lot of normal people, but it's likely. But at the same time,
what do we define hard landing as?
So I'll tell you in a second. But at the same time, I think what's happening is in the equity and financial markets, we are consolidating a bottom because we're seeing through to that end state. And this is where cheap equity gets bought. So why is there a reason to sell now? I think a lot of the people that are selling, the smart money sellers that I talk to, are essentially right now selling to book in capital losses to offset other capital gains from this year, a term that's called tax loss harvesting. And so if you have gains through this year, which some of us do, this is the great moment to just sell the losers, to book the loss, to net it out so that you can minimize your taxes for next year. That's probably, I think, where we are at. And I think that's why there's still consolidated buying. So what is the hard landing, Jason? If I had to predict, I think what David said is absolutely right. You're going to see unemployment get to an awkward and uncomfortable number. 5-6%, I think, could be something that we see. And I think you're going to see a lot more companies pull way back on their spend because demand is going to really modulate. I'll give you a crazy example. What happens to all the people in the United States that are on ARM mortgages, right? Adjustable rate mortgages. When those things reset, they're going to reset 200-300 basis points higher. Their monthly payments are going to go nuclear.
Oh, it's already happened, Chamath. I literally had a family member call me about this, and they were like, "What do I do?"
So in the UK, in the UK, 40% of all mortgage dollars are interest-only ARMs that will reset in January to around 4%. 40%.